Everyone, what's going on, and welcome to another day navigating markets during this war. As of time of recording, there was a new release here from Financial Juice stating the FBI has warned police departments in California that Iran wants to retaliate for American attacks by launching offensive drones against the West Coast, by ABC News. So far this week, we've been balancing the idea if there's going to be a re-escalation or de-escalation, and we've been pretty much going back and forth with Trump on one side saying that the war is over soon, and then on the other side you do have things like this where Iran wants to go ahead and attack the West Coast. You can see the market reaction here was immediately dollar index up, S&P down, oil up, pretty much in line with the risk-off trading that we've been seeing this week. Taking a look at market price action today and themes that are driving the market, not much has changed. We're still operating under the current regime here. The S&P 500 is still trading within yesterday's range. The dollar index, though, on one side is making a push higher here, mostly driven by higher US yields. We did get CPI this morning and it did come out in line with expectations. Prices rose steadily at 2.4%, just above that Fed's 2% target, and the reaction from CPI was actually pretty minimal. Remember that the CPI report was from last month, so the current elevated price of oil really didn't trickle into last month's reading. However, moving forward next month and beyond, we will actually get to see how much inflationary pressure was actually instilled into the US economy. So I think yields right now are painting the story. You have the 10-year yield and the 2-year yield both elevated. I'm basically using yields as clues for where the dollar direction could go. So as of now, you are seeing that flight into the US dollar being pretty prevalent across all the major currencies. Euro down, pound down, Kiwis down. You do have dollar yen up on the day, dollar Swiss, dollar CAD is a little bit flat here, obviously because you do have elevated oil prices, so that's going to pretty much wash out there. Aussie dollar relative strength here is looking pretty good. I'll go ahead and go over my trades here at the moment. I am looking for a break and retest type situation. That way I can go ahead and trail stops and then play the momentum play. However, if we do start to fail around this level here, then I'll probably just take profits, especially if we still see risk off trading happen, if we see more headlines like this where you have another wave of even maybe more brutal escalations, right? For the most part, we've been attacking Iran. Now they're trying to attack US mainland. That would obviously not be a good thing, and that would really cause a lot of escalations, risk premium into oil, all that good stuff. So it'll be just a trickle effect that I want to avoid being on. Aussie CAD here is doing pretty well considering that the Canadian dollar is pretty much pegged to oil. Oil is strong. Aussie's actually making a lot of lift off here, picking up a lot of that weight. Aussie Swiss as well doing pretty well. So the trades are in profit, not gonna lie, they're doing pretty well. So I'm pretty happy with the position either way. All the positions now are risk free, so I'm just kind of just riding the wave and see how much it can go. Looking at today's currency strength chart here, comparing all of the major currencies, you can see that here that the Aussie dollar was the only one really getting that lift here. I have an idea as to why that is. I'll go over it here with you guys shortly here, but yesterday this was the same thing going on. You had the Aussie dollar here in dark blue elevated. Now it's starting to give back some of those gains here as you are starting to see another flight into the dollar off of those risk off comments. So this was an interesting post here that I saw on X, and it makes a lot of sense, right? So the Australian economy, for starters, is somewhat correlated to China, and so as of this whole thing, Iran has still allowed boats to pass, oil tankers to pass through the Strait of Hormuz. However, it's been for China and Russia primarily. China has been benefiting during this whole escalation, so the strait is still open, but only to Iran's allies. So China has been operating business as usual, and if China does well, the Aussie dollar tends to do well as well. So that's why I do think that we are seeing still the Aussie dollar here holding that relative strength. Now, beyond that speculation headline, you do have some fundamental drivers in favor of the Aussie. You can see here on the top status page, you have pretty much the Aussie basket getting a very bullish reading. Aussie Kiwi, Aussie Swiss, Aussie Yen, Aussie CAD. The only one that's neutral right now is Aussie US dollar, but the Aussie dollar as a whole, like if you just want to compare the Aussie isolated, it's getting a bullish reading as well. So I like to see that. Looking at the CPI chart here, I know I might sound like a broken record here, but they're experiencing elevated inflation. For print of high CPI, 3.8%, not good. The RBA is trying to hike those rates, giving you that bid in the Aussie. You also do have institutional activity here on the latest COT report. Accumulation of Australian dollar here is at the top of that list with a 2.7% net change. We love to see that. Interest rate projections for the Aussie, comparing it against the other major currency peers, you can see that the Aussie in blue is going to remain elevated against the other ones, and the more that gap widens, the better it is for the Aussie. So with all that said, there are some strong fundamental drivers leading the Aussie upwards. I'm going to let the trade play out here. Again, if we get that break and retest structure, I'll go ahead and trail stops there, but I'm going to let the trade breathe, and I do think that there's some upside there for the Aussie, especially if it can be somewhat immune to what's going on in Iran with the US, if it's benefiting off of that China relationship that it has, and China's continuously getting those barrels of oil. Very interesting interesting dynamic, I know, because the Aussie dollar is a risk on currency, and usually right now, as you're getting risk off sentiment, you will see the Aussie plummet, but as of now it's not, right? So there's a lot of caveats when it comes to currency trading, and that's why I try my best to kind of, you know, make these videos and articulate what's going on. That way you can have a better understanding as well. If you start to get a stronger bid into the dollar here, I'm actually looking to go ahead and play that momentum to the upside. I do think that the level of resistance here, that 99.500 level, is a strong one. You can see that the dollar index has rejected that level multiple times with these strong wicks. However, with this new wave of escalation, the prospect of Iran targeting the US or the West Coast with drones, then I'm definitely going to go ahead and play the momentum play if we do get a break to the upside. What that would look like is a break and retest type situation, and targeting perhaps the 100 to the 100.5 level. Looking left on the chart, I think that's the next level of resistance we have to trade into. The way I would go ahead and participate with that is by shorting the euro dollar. Again, the price action is pretty much the same there, break retest type situation, with a take profit at the 1.1400 level. You still have that bearish reading of -5, so that's good confirmation there. And if you start to see an accelerated depreciation in the euro as money's flowing into the US dollar, I'm definitely willing to go ahead and put some good size behind that trade. And that's it, guys. Thank you guys so much for watching. I truly appreciate it. If you have any questions, feel free to drop those down in the comment section below. I would like to know your opinion. Is this another wave of escalations, or is this the last thing we see before we see some resolution? I'm curious to know your thoughts. Like always, have a blessed rest of your day, guys. Trade safely. Bye-bye.